everyone, welcome back to Sura TV. I'm Loretta Pata, your usual host with the most. So as promised, I did say I'm going to bring a guest who are going to talk about private equity today, so that we can get a better understanding what private equity is. I'm sure most of us have heard about it, but what is that? Because it's also a form of investments that we've been talking about the whole week. We have been talking about investments. What can you invest your money in? So we're going to talk about that. I have Ngodya Chimbwete here today. He's actually a good friend. We've been friends for many years, actually. So he's going to talk to us about that. Welcome to the show.
Thank you for having me.
We really can't wait to hear what you got to offer. He's in his 30s as well. You're married, right?
Absolutely.
Yeah, with a kid as well. So we're gonna share a bit of his journey as well on how he has tried and gone through his investment journey in his 30s. If you're going through that as well and you don't know what to do, maybe you can get a few ideas from him today. But we're gonna get a bit of background of who he is first and what does he do. So what do you do, Ngodya? I'm gonna call you NJ, okay? That's the one I'm used to. Yeah.
Like you said, I'm a private equity transactor at a company called Africa Lighthouse Capital.
Mm-hmm.
It's a private equity business. So what private equity is essentially we buy shares in unlisted businesses, and our objective is essentially to double or triple those businesses over a particular investment horizon, whether it's 3 to 5 years.
Yeah.
Doubling those businesses can come in various forms, whether it's improving operational efficiencies, re-engineering their balance sheets, improving corporate governance in those businesses so that by the time you sell that business, it's more valuable and it can attract a higher price.
Yeah. So that's what you guys do. You'll collect funding from different people or different companies, and then you invest.
Absolutely.
In those unlisted companies. What is unlisted companies? These are companies that are not in the Botswana Stock Exchange or any stock exchange. Is that it?
That's 100%.
Yeah.
Yep.
All right.
So privately held businesses, essentially.
Okay. All right. So thank you for that. So I would like to now get into your bit of your life and how we invest, so that we are more relatable, with our stories and how we invest our money. When you've transitioned over the years, when you started work and you got married, you got your job, you got married. How have you transitioned in terms of your investments? How did you start when you started working with your investments? You can take us through that journey.
Okay. So in my 20s, I'll say, or when I started working, my investment was mostly on the stock market. I think was a bit biased towards the stock market because that's where I started my career, and that was like my entry in terms of investments and understanding what investments were. So I used to invest quite heavily in the stock market. I used to particularly choose stocks with like a lot of growth potential.
Yeah.
And also stocks that pay quite a high dividend. So I used to focus specifically on property stocks, as well as as I said, stocks with high growth potential that are expanding, companies that are expanding into new markets, or companies just with an aggressive expansion plan.
Yeah.
But outside of investing in the stock market, I think I also invested in myself through
furthering your education.
Furthering my education.
I remember that. So self development is also an investment.
Absolutely.
This is actually a good one.
Absolutely. I did my master's. So I think that's quite an important form of investing, because I'm leveraging myself so that in the future I can have access to better jobs, better opportunities. Absolutely.
So how did that go with investment in the stock market? I mean, this is we're talking about investing in the stock market, and how did that go? Tell me about that journey, because obviously with investing in the stock market, it has to be long run.
Yes, it's absolutely
I believe
long term.
So are you saying you are still invested?
Yes,
in those equities?
I am definitely still invested. Although I would like to be a bit more diversified in terms of, because right now I'm primarily invested on the local stock market. But I'm in the process of getting into sort of other markets. I'd like to, for example, invest in developed markets like the US or for example, just to give you in terms of context, in terms of so the S&P 500, which is like, it's called an index. It's a basket of the top 500 listed companies on the US stock exchange. So that index in the last year has increased by about 100% plus. Over the last 10 years, I think it's gone up about 500, north of 500%. So just in terms of diversifying your portfolio across different exchanges, I think there's a lot of value in that.
Because I mean, when you usually mention this, you're actually giving the viewers a very good idea on it doesn't have to be only in Botswana. And also when you invest in the stock exchange, it has to be high value.
Absolutely.
This is how the strategy, the good part about the reason why I brought NJ in is because he is in this business. So tapping your brain in how you are investing your money.
Yes.
At your age, you see, the important part about this is that it's how old are you again? Let's if you don't mind sharing. Okay, he's in his 30s.
I'm in my early 30s.
He's in his early 30s. So the reason why I want to share this is because I'm also in my 30s. Like now, I think I'm getting into the late 30s. I've just fallen into the late 30s, but we're all in our 30s. And how can we now invest our money at that particular age? That's the reason why I brought you in as the expert. But okay, this is what you did. So the highlight here that I'm picking is make sure that when you invest into the stock exchange, you go to Botswana stockbrokers or you go to Imara or wherever, and you want to invest in the Botswana stock exchange, make sure they're high value. And what are high value? What are high value stocks? Which companies are high value? Property is normally quite a stable one. I hear you mentioning. And also, how do we look at high value? Okay, can we just get into that? Like, let's say you get into the stock exchange. How do you look at high value stocks? And you want to go in? Do we look at the turnover? Do we look at the balance sheet? What do we look at?
Okay, you rightfully said that. Go through if you want to invest in the stock market. First thing is to contact one of the brokers. They'll give you access to the exchange. And then to answer your second question on how do you identify high value stocks. Okay, so the investing is essentially buying low. And then buying at a low price and then selling. Hopefully the business grows and then
you're able to sell at a
higher price. So identifying companies without getting technical. That's why it's important to speak to your broker. But
they'll simplify it.
They'll simplify it for you. But there are various techniques that you can use. For example, you can look at the stocks.
Performance.
Not performance, but first of all, let's say the multiple, like it's called something called like the PE ratio, price to earnings ratio. I'm trying to not get too technical.
Yeah, too technical. Okay, so what you're saying is the stockbrokers will help you, and without you having to get too technical, they'll say these are high value.
These are
not high value. This is high value. They should be able to help you with that.
Yes.
Because that's a technical thing for you to look at. Is that what you're saying?
The various metrics that they look at to say, okay, fine, this stock is trading at a discount to its true value.
Yeah.
You understand? So whatever metric that they use to identify the discount that is trading at right now, and versus what the business's plan earning potential going forward is, they'll be able to identify those stocks that have a lot of growth potential in terms of price.
So it's very important. You want to invest in your stock exchange, one of the ways for you to go invest your money. It doesn't matter whether you're in your 30s, whether you're in your 20s. the earlier you do it, the better,
Absolutely.
actually, so that it's normally a long-term thing.
Absolutely.
You can't expect after 2 years you're just like, you want your money. You're not going to get much from it. So the earlier you do it, the better. But it doesn't matter, even when you're in your 40s, even when you're in your 50s, please, if you have not invested your money, diversify. Because I think the important part about investing money is it doesn't necessarily have to be in one area. Like you've been mentioning, you wanted to diversify, but you were focused on the stock exchange, but are diversifying the stock exchange as well, not necessarily in Botswana, but elsewhere as well. So you can diversify your stock exchange. Yesterday we talked about government bonds and company bonds. That's also quite a good one, but the returns are not as good because it's less risky as compared to the stock exchange. The stock exchange is quite risky, isn't
Yes,
it?
yes.
Yeah. Why is it risky? Let's get into that.
Because you're buying shares in the company. So if you look at the funding structure of a business, there's debt, which is the highest ranking form of ranking in terms of the company's capital structure, and the lowest ranking instrument is equity. So basically, so debt providers, they have security of they usually have, let's say, they're usually secure. So the banks will provide debt to the company, and then they'll secure that debt against property and also the payments are contractual. You understand?
Yeah.
When it comes to equity, you as an investor, your cash flows are not guaranteed because they're dependent on dividends. So how much profits the company makes in a year and how much of those profits they declare as dividends. You understand? So and on top of that, if the company, God forbid, was to be liquidated, the company would have to pay all its creditors first, and you'll be last in line. So it's riskier than higher ranking instruments being debt and so on and so forth.
Yes.
You understand? Yeah.
No, I get you. Basically, what you're saying is you're a shareholder.
Yes, you're a shareholder.
When you buy equity in a company and you buy shares in a company, you're a shareholder. So whatever happens to that business, even if it closes down, you cannot expect to be a priority. The priority will be the creditors and other stakeholders, and then you're the last priority because you are also a part owner to that business. Because basically, when you're a shareholder, you're a part owner of that business. That's what you're saying. And also with dividends, they're not always declared, isn't it?
They're not always declared.
Yeah,
it really it's
dependent on a lot of factors.
On a lot of factors. So it's how profitable the business is.
Yeah.
Whether the business, if it's a high growth business, a business that needs to invest heavily in growth or capital expenditure.
Yeah.
They'll prioritize the company's cash flows to growth and less on dividends. But also your benefit is that as the company grows, the value of the company grows as well.
Yes, so, absolutely. Yeah. All right. So long term. So when you invest in it, so let's say this now. You can also, let's say you invest in BTC. For instance, I don't know, 20,000 Bula and BTC 5 years ago. You can actually, if BTC has been doing well and giving you dividends, you can actually increase those shares to 50,000, isn't it?
You can reinvest those dividends back into the business by buying more shares.
Yeah.
Okay.
So now we've talked about what you did when you started. How's it going now? What are you doing now? Since now, Ghana, the thing is with investing as well as with life, you evolve. Things change. Your priorities change, especially now when you get married, when you have kids. You don't have as much access to invest as much as you did. Now there is school fees, there is more groceries. It's no longer a 1-bedroom house, it's a 3-bedroom house. Now we want to buy a house. How has that changed for you, and how are you handling that?
I think the importance of discipline has become, I can't emphasize financial discipline
now more than ever,
and having a plan, like whether it's putting aside X amount of my salary to an education fund.
Yes, now that there's a child.
Now there's a child. So basically making sure that he has an education fund, so that later on, I mean, obviously, we won't. Whatever happens in life, he's guaranteed.
Yeah.
Also, on top of that, I can't emphasize diversifying my investments across other instruments now. Things like property.
Now more than ever.
More than ever, absolutely. And for me, it might be different from other people because with also property, there's investment property and also some people just want to buy a house just to live in.
Yeah, that's not investment. You're living in it, right? I think that one we really need to emphasize. You buying property for yourself is not an investment. It's
absolutely.
You're just getting a roof over your head.
You're just getting a roof over your head. Absolutely.
Yeah.
So so the thinking becomes different now.
Yeah. I get you. So if you're to recommend, okay, not me to recommend, what education policy or education fund did you get into for your child, for instance?
Okay. It's also important to speak to a financial advisor to direct you into the right place. So I mean, you don't have to get a specific education policy, but you can also invest in unit trusts. So for instance, so on my end, my education fund is via unit trust and investing in a unit trust.
Yeah. Now, when you actually mention unit trust, it's very important for us because these are one of the things that I did mention that we're going to talk about because the thing is with investing, most of the time, or investing in the stock market or investing through asset management companies, you have to have a lump sum of some sort.
Yes.
You have to have a certain budget. So what I actually talked about in one of the episodes is that I remember when I made my shopping, when I started working, is that I needed minimum 10,000 for me to start talking to any asset management company. They just said, just come with a minimum 10,000, then we can start talking about the different investments you can get into. And I remember accumulating the money into a savings account, and then I did that. But now, what if I don't have 10,000? Let's be now we also need to be a bit realistic or also include the ones that don't have 10,000 right now, but they would like to invest, and they're not going to have 10,000 in the near future. That easy because of the priorities that they have to do. Money is really tight and priorities, but I can spare 500 a month towards something. So that's when we come in and we talk about unit trusts.
Yes.
And there's only one company that offers unit trusts in Botswana, isn't it? Right?
No. I think. I don't want to speak for the asset managers, but there are various
unit trusts now.
Asset managers that offer. I think they all. I wouldn't say all, but there are various asset managers that
offer
different
unit trusts. So the kind of unit trust is it's retail. This is this is now you don't have to have 10,000 below going up. So what you're saying is they can visit any asset management company and find out if they have unit trusts and start unit trust with that company and start some sort of education fund for your children. Is that what you're saying? All right, that's a good one. Thank you for sharing that. So obviously what you're saying at your stage now, you started prioritizing education, you started prioritizing housing for your child,
exactly.
And you start thinking as well about property investing as well. Why property investing? That's another investment. On its own. Why property investing?
Property, I mean, accommodation is a need, right? It'll always be a need. So it's one of those. It's for me, it's a solid investment because housing would always
be a need.
Always be a need.
Yeah, I think also we need to be strategic about that one. Don't go build a house in the middle of nowhere where there's nobody to live, and then you say, "But I invested in property." So you get what I mean. Some of us probably have land in the middle of, especially us here in our country, we probably have land in the middle of somewhere, and we're thinking, I'm going to invest there. But you need to look at various aspects. Is there market first of all for that property?
And also, I mean, from my reasoning as well as God forbid if there's a time that I'm out of employment, I've got that passive income coming from rentals. So it's also it's
a good investment.
As I was emphasizing earlier on, just diversify my investments across different assets. Some that offer passive income, some that that in the long run will grow. That I can sell at a higher value. So it's just trying to be more smarter about
All right, I think that's a good one. So, what advice would you give anybody right now, in their 30s, that's starting out, and some are obviously in the middle, that with kids, family? What advice would you give them right now in terms of prioritizing their expenses? I'm sorry, their investments right now. Where is the best place to go right now?
The best place to go right now. That's a difficult one.
Is it a hard one?
Yeah, that's quite a difficult one. But I would advise in terms of, I'd say in terms of prioritizing your income, whether it's from a salary or whether it's from a business. If you're going to, for example, if you're going to use your income to get debt, get the right debt, get debt for investment in a property. Prioritize your income on less current consumption instead of buying that. If you're earning 5,000, if you're earning, I don't know, for argument's sake, 10,000, don't get a loan to get a fancy car. Rather get buy an apartment.
That you can rent out later, even if you live in it now. Can I remember, even if you're buying, let's say you're buying an apartment right now and you're in your early 30s, you can think about it as a long-term investment where you say, okay, it's roof over my head right now, but I'm going to leave it to be rented out in the future, because I don't think you're going to outgrow it. One way or the other, you are going to outgrow it, and so then it can. I get you on that.
And also later on, I mean, as it increases in value and as you pay down your debt, you create equity for yourself. You can release that equity, start a business, buy a bigger property, buy multi-reses. So there's high value in properties from. It's
so when you start off, highest priority, ensure that you invest, or don't try and focus on the new car, fancy past right now. At least try and make sure that you're invested, make sure that you have a retirement plan. Let's talk about retirement planning.
Yes.
On the importance of it. Do you have one yourself?
Yeah.
Why?
So I've got two. I'm not sure if it's well, okay. I wouldn't say it's the right or wrong decision. So I've got two. One with my employer and one personally.
On your own, Why did you do the two?
I think the first one I did it early in my career.
With your employer? Or the individual one?
The individual one, and then the other one was through my employer. I can't.
Couldn't it be that? Because I remember talking about this, because I have like two as well, and my reasons was that when you retire, a pension it's a quarter of what you're earning.
Absolutely.
I think it'd be best to have at least two guaranteed money coming in. You know what I mean? Besides property, which is almost guaranteed, but sometimes you won't have tenants. You know what I mean? Or something might happen to the other investments, but at least with pension, you're going to get it every single month. But at least if you're getting it, you're getting a couple of them coming in rather than one, because it's a quarter of what you. So at least you should be able to go. You need to be able to think, when I retire, I want to maintain at least
a certain
level of standard of living, or at least maintain the one that I'm living, or even higher, if anything, because nowadays I'll be more free. So that could be the reason of having two. I don't know what you think about that.
No, absolutely. You hit the nail on the head.
So it's actually quite a good one to diversify. Why not? So do you want to say something?
No.
Okay. So let's now get into private equity. What you do?
Okay.
What is private equity? What is private equity? Because it's also some sort of investment, so I'd like to touch on it as well.
Okay. As I mentioned earlier on, private equity is essentially buying of shares in privately held companies. And buying shares in privately held companies with the intention of growing those businesses, growing those businesses and making those businesses more valuable, such that we're able to sell them at a higher price, higher price later on in the future. So ultimately, we raise money from investors in a particular fund, manage that money on behalf of those investors. Use that money, as I said, to buy equity in businesses, and essentially partner with owners of the business, the management team, to create value in
that business for you and for that business.
Absolutely.
Yeah. All right. So who are these investors, for instance? The budget-wise, who qualifies to be an investor? Yeah.
Okay. So currently so the fund that we are currently managing is our investors are institutional investors. It's institutional investors, so it's pension funds, insurance companies, so on and so forth.
Yeah.
But the minimum ticket size for this particular fund is about 5 million
each.
Yeah.
Yeah. So basically, if I want to be one of those investors in that fund, I should have at least a minimum 5 million.
Yes.
Yeah. I mean, there are people who can have that much, so it's best that we don't only cover the lower end or who can afford 5 million, but the ones who can afford 5 million should know that there's this possible type of investing as well in private equity. All right. So what is, okay, you've answered what is high net worth. So how does it work? Take us through the process of, okay, you've already told how then you're gonna grow the business, etc. How else can it work? Is there any other way of investing besides investing in that particular business? Is there any other way that you can do it? Other different types of private equity?
Other types of private equity. So
for instance, the property, let's say like for instance, if BPOPF needs you guys to invest that money, and it's basically for property. Are they private equities that focus only on property? Are they for instance?
So ultimately we are asset managers, but our primary focus is alternative investment, specifically private equity. But there are other asset managers whose focus is, for example, investing in property. Different asset classes have different return profiles. So different. So they managers that particularly focus on investing in properties, us as private equity, and other managers that focus on listed equities, buying and selling of shares on the stock exchange.
All right, okay. I remember us talking about this earlier, and I would like us to just explain a bit. For instance, if I'm a government employee and BPOPF has got this fund and it's saying, our funds are with this asset management company, they're doing this, what does that mean? You understand? And you explained it to me earlier. What does that mean? Let's explain to the viewer. If you're a pension holder and you're a pensioner, no, not a pensioner, but you're paying pension to BPOPF, for instance, and they're busy investing your money on your behalf. What do they do with that money? Let's give an example. What do you mean they're investing money on your behalf? What does that mean?
Right.
Yeah.
So BPOPF, your pension will go into obviously the BPOPF, and
the money that you're contributing every month.
Absolutely. Your contributions every month will go into the pension fund, and what BPOPF would do would allocate that money to different managers, managers that focus on, as I said, listed equities, managers that focus on private equity like ourselves. They'll allocate some of that funds to managers that focus on property. They also give some of it to international asset managers to invest in
as well.
In international asset classes. So the purpose of that is to diversify the portfolio so that if there's a downfall in one asset class, it can be offset by
the other one.
The upside in the other one. So it's to smoothen out the risk profile.
The risk profile. So basically, what NJ, if I to explain that in simpler terms, for us, we're saying we're busy contributing towards our pension, and then at the end of your retirement, you're getting this bit of lump sum, and then you have a bit of money coming in every month. For that money, for it to be available, that money should have grown. If you look at what you've invested versus what you are getting, that money should have been grown first for it to happen like that. And how it happens is basically BPOPF will collect your money, for instance, and then once they've collected your money, then they allocated to different asset managers, private equity, property, and then they're able to invest all this money so that you can be able to get your pension at the end of your retirement.
Absolutely,
right? Yeah.
Absolutely.
So basically, that's what you guys do in a nutshell. Yeah. So, but thank you so much. I hope you enjoyed the interview.
It was good.
Did you join? Have you been on TV before? Did you?
First time.
It's your first time.
First time on TV.
No, but thank you so much. We really appreciate you
Pleasure.
for your time and for sharing your knowledge today. I hope it was helpful. Yeah.
Absolutely. Thank you very much for having me.
All right,
I hope it was insightful.
Yeah, it was very insightful. I learned a lot today. I hope I asked the questions right. I mean, at one point you're just like, "What are you saying?" I saw that. But thank you for understanding, and thank you for explaining better so that the viewer can also actually understand what you guys do, and also sharing your journey as an investment person. What did you do, and what else did you tell? Thank you for watching, guys. I hope you enjoyed this. Bye for now.
Ciao, ciao.